Hey everyone, it's Ryan here. Happy New Year and welcome back to my channel where I'll be sharing with you different Canadian financial tips and concepts. Now today what I'll be talking about is the 7 tax changes in Canada for 2023. Now 2022 has been a rough year with super high inflation and rising interest rates. So what the federal government is doing is they're actually making some changes to help Canadians reduce our taxes. So today I'll be going over those major changes, including the tax bracket, the tax credits, RSP, TFSA, CPP, capital gains exemption, and the new account FHSA that's going to be introduced in April 2023. Now before we get into it, if you haven't already, please like the video and hit the subscribe button so you'll get notified for future videos. Now without further ado, let's get right into it. The first change is that they've adjusted the tax brackets in 2023. In Canada, we have the progressive tax system, which means at the beginning, you actually pay a lower tax, and as your income goes up, you actually pay higher taxes. So the first tax bracket we have is the 15% bracket, and the second bracket is 20.5%, and third bracket, it jumps to 26%. Now for 2023, the rate itself didn't change, but what they did change is the range of income for each bracket. So for the first bracket, they actually increased it by roughly $3,000, which means that more of our income is going to be taxed at a lower tax bracket, which means you get to pay lower taxes overall. So with the new change, the first bracket will now start from $0 to $53,360. Now with the second bracket at 20.5%, they also increased the range as well, and it increased by $6,000 compared to last year. So with this new change, the bracket is now from $53,000 to $106,000. And then with the third bracket at 26%, they actually increased it by $10,000. So now the new range will be from $106,000 to $165,000. So this is great for Canadians because we are all going to be able to save more taxes. But do keep in mind that we're only talking about federal taxes here. So depending on which province you are in, you will be taxed at provincial tax rates as well, on top of the federal tax rates that we're talking about here. The second change is the basic personal amount. Now for 2023, they actually increased it to the flat number of $15,000, which means that any income below $15,000, you actually pay zero federal taxes. But if you earn more than $165,000, then you would actually get a clawback. So you would get less of this personal amount, but it actually won't go to zero. The minimal amount that you will get is still going to be around $13,000, and that's when your income is above $236,000. The third change will be about the TFSA. So the TFSA, what they've done this year is they've increased the contribution limit to $6,500. Now this is $500 more compared to before, and this is great for us to grow our money tax-free inside, and we can choose to withdraw at any time tax-free as well. And with that in mind, this account is great for investing, but a lot of times what we've seen with our clients is that they actually start using it as a savings account, which is not really using it to its maximum potential, because the whole point of this account is to really grow our money tax-free. Now if you use it as a savings account, then there's probably not much growth inside, or you're getting minimal interest. So what I always suggest my clients to do is, if you do have some savings that you're comfortable investing, then I would suggest you invest that amount into your TFSA at the beginning of the year, starting January 1st, because this will allow you to have more time to grow the money inside this account. Now if you don't have enough savings to maximize the room, don't worry, the unused room will actually get carried forward forever, which means that you will be able to use this room in the future. The only criteria to open a TFSA account is you need to be at least 18 years old and that you live in Canada and you have a valid SIN number. And another thing to note is the contribution room, it doesn't depend on your income. It only depends on your age or when you actually moved to Canada. So for example, if you look at this table here, if you're born before 1991 or you're 32 years old, then you would have the maximum contribution amount of $88,000. But let's say if your birth year is 2005, so you're only 18 years old this year, then your contribution room will only be the $6,500. And if you're a new immigrant, then this table will show you how much contribution room you would have based on which year you moved to Canada. So let's say you're 40 years old and you moved to Canada in 2009, then your contribution room would be the maximum, which is $88,000. But let's say you only moved here in 2022, then you would only have accumulated 2 years of contribution room. So your contribution limit would be $12,500. So even if you're not a PR or a citizen yet, you can still open a TFSA as long as you live in Canada and you have a valid SIN number. The fourth change is about RRSPs. And what they've done is they have actually increased the contribution room cap from $29,000 last year to this year's $39,000. So this new increase will benefit high income earners that are making over $160,000 a year. Now, as a reminder, the contribution limit for RSP is 18% of your last year's earned income. And your earned income actually includes your job, any business income that you have, or any rental income that you have as well. And what is not included in this formula is dividend income, investment income, or capital gains. I've gone through the details of RSP and how it works in a previous video, so you're welcome to check it out here. The fifth change is the CPP, or the Canada Pension Plan. And this is something that's mandatory for all Canadians to pay into, but most of us don't really pay attention to it because it's actually automatically deducted from our paycheck. Now, what they've done this year is they've actually increased the tax rate to 5.95% of your income. Or if you're self-employed, then it would become 11.9%. So the annual maximum would be $3,700 if you're an employee, or if you're self-employed, then it would be $7,500. In order to reach this annual maximum, you would need to earn an income of at least $66,000, which means that any income below that, you will be taxed and you have to pay CPP, but any income above the $66,000 mark, you actually don't need to pay any CPP. The number 6 change is the EI, or employment insurance. Again, for most employees, this is mandatory, and what they've done this year is they've increased it to 1.63% of your income, with the annual maximum of $1,002, which means you're actually paying $50 more compared to last year if you were earning an income of $61,000 or above. Number 7 is the capital gains exemption for corporate owners. Now, this year what they've done is they've given a huge increase to this capital gains exemption. So now it jumped to $971,000. And what this does is it actually helps small business owners who own a corporation and they plan to sell the business, then they can claim this exemption. So to give you a simple example of how this works is, if let's say you own a corporation and you sold it for $1 million, then this $1 million would be taxed as capital gains, which will result in $200,000 in taxes that you would need to pay to the government. But with this capital gains exemption of $970,000, now when you sell your corporation for $1 million, you actually minus $970,000 as an exemption. So you would only be taxed on the remaining $30,000, which would result in only $300 in taxes. So you can see this exemption actually helps small business owners save a huge amount of taxes. And number 8, and the final change, is the FHSA, or the First Home Savings Account. This is a new account that's going to be available in April 2023 to help first-time home buyers with saving towards their down payment. It combines the benefits of both TFSA and the RSP into one for your home purchase. For example, any investments can be grown tax-free and also be withdrawn tax-free for your home purchase, just like the TFSA as well. On top of that, any contributions that you make will become a tax deduction for you, so you will actually lower your taxable income for tax calculation. So this works just like the RSP, and you'll be able to get more tax savings out of using this account. But of course, with these benefits, there will be some limitations, and the number 1 is the contribution limit will be $8,000 per year with a lifetime maximum of $40,000. So what that means is in April, once you open an account, you will only be able to save $8,000 inside this account. And if you want to contribute up to that $40,000 maximum, then you would need to wait 5 years before you can use up that room. And the criteria to open this account will be 18 years old, and you need to live in Canada, and that you qualify as a first-time home buyer. Now, for its definition, it's actually the exact same as the RSP home buyer's plan withdrawal, and it just means that you cannot own a home that you lived in the previous 4 years, which means that if you only own a rental property, then you might still be able to qualify as a first-time home buyer. One tip I have for people who do want to buy a home in the future is that even if you don't have enough savings to contribute into this account right away, you should open this account as soon as it becomes available, because if you don't open that account, then you actually won't be able to save up that contribution room for future years. So So at least open an account first so you can start accumulating that room. And that's all the changes that I want to go over today. And I hope you can use this info to really get yourself ahead so you can use it to your advantage and keep more of your hard-earned money in your own pocket. If you like what we talked about today, please hit the like button and subscribe to my channel for future content. And leave a comment below to let me know if any of these info has helped you. Thanks again for watching, and I'll see you in the next one. Bye!